most of you are not going to invest in JVC because it's overcrowded. That's what most agents say, and eventually that's what people start believing too. But isn't it strange that today JVC is one of the easiest rentable locations? If you own an apartment there, then something doesn't add up here. While the noise suggests that JVC is not a good location anymore, the fundamentals say something else. The problem is that the fundamentals are not as obvious as the noise. So people do not really notice that. So in this video, let's break down what's actually happening in JVC and whether this location still makes sense as an investment hub. And once we understand that, let me explain you one specific project by a developer that is positioned to maximize the benefits out of this situation. So first, let's address the elephant in the room. When people talk about JVC, these are the common concerns, things that I hear. It's too much crowded and so many number of units available. Already 35,000 residential units there in JVC and another 35 to 40,000 residential units to be handed over the next few years. That's too much. Another thing is that the traffic situation is pretty bad. It's a mess. Then a lot of construction going on. So it's already done and there's no more growth in that location from an investment point of view. This is what people talk about when we say JVC. Now, let's hold that thought for a moment and let's take a step back and understand from a JVC residence point of view, someone living in JVC, right? Let's understand why they live there. Why JVC? Because despite all these objections that we hear, still the number of rentals are very high and it is one of the locations where it is easiest to rent an apartment if you own one there, right? So why do people prefer living there? Whoever living there, why do they like to live there? Why is that the case? Number one, the centrality, where it's located, centrally located, and it's easily connected to all the areas of Dubai, be it the Dubai South, be it the downtown, be it the Dubai Marina. Then the livability, it is a self-sufficient community. It has a mall, it has schools, clinics, medical centers, it has ample greenery, 30 plus parks. It is a pet-friendly residential community, and most of all, it is affordable. So a lot of Westerners, Europeans love living here because if you compare to say Dubai Marina or JBR, which doesn't give that residential feel and it is expensive. So a lot of Europeans, Westerners prefer living here because you get all this for a much affordable price. That lifestyle that Westerners prefer, that lifestyle you get it in JVC for a much affordable price. And then if we also understand another thing, what is the future plan for JVC? What has the government planned for JVC for the future? Well, with JVC, the plan is to house a population of 300,000 people in that community. How many people do you think are currently living there? It's between 80 to 100,000. So it's not even halfway there yet. Next, let's understand the strong fundamentals that the government is taking, because government is taking certain big significant steps in and around this location, and most people are not aware of those, right? Because if you look at it from a different point of view, as I said, the plan for JVC is to house 300,000 people. We are not even halfway there. So if you look at it from that angle, forget about everything, purely from a numbers point of view, for 300,000 people to live, given the demographic of people living, young professionals, individuals, and the couples living in JVC, at least 120 to 130,000 units are required, assuming that 2 to 3 people live in an apartment. but it's going to be more than that, because there's a lot of one bed studios where one person is living, remote workers, and likewise, right? So from that point of view, it makes sense for so many units to be delivered and handed over in JVC, right? Okay, now let's understand what steps the government is taking to enhance the appeal of this location. Before understanding the measures that the government has taken, let me explain you something, an investment fundamental that is at play in this location. Usually, for example, if you look at Dubai South, the government is building demand anchors there. There is a Expo City coming, there is a World Trade Center, there is the airport coming. Hence, people are investing. Yet the crowd is not there yet. So people are investing having the future in mind, right? You invest there now, people will move eventually, and then it's gonna grow. With JVC, people are already there. It's already halfway there, right? So with JVC, the government is still investing, but why? Not to make it a lucrative location, just to get rid of the bottlenecks and to make sure that the growth continues without stopping. That's the objective, right? So today, if we look at what bottlenecks are there, whatever the concerns that I told earlier, people come up with, could be the traffic situation, it could be the number of units, or mainly the traffic situation and the congestion, right? That is the main concern. And hence people think there's no more growth. That's not the end of it. That is just a bottleneck. Let's understand this by looking at the location, so you will understand what I'm saying. So this is the map of JVC. Now if you look at, there is an entry point here, entry to Hessa Street. There is another entry point here, entry to Al Khail Road, and another entry and exit point here, again entry to Al Khail Road, leading to Al Fayz Street, right? So there is only 3 entry exit points. That is the challenge. During peak hours, there's a lot of traffic being built up around this location, and like from the internal roads to and from the entry and exit to Hessa Street. If you're someone living and working in Dubai, you would know this, right? So the main bottleneck is, for this community with 80,000 residents, there's only 3 entry exit points. This community, the data suggests that it is one of the highest transacted, highest number of rentals, meaning people are living there, but this is the main bottleneck, right? Now let's understand what the government is doing, so that you will really appreciate what's happening. This is the news article that you need to pay attention to. RTA opens full scope of works under Hessa Street development project. It happens in 2 phases. If you read the article, it's not clear unless you really know the technicalities, and unless you really are into transport and logistics, you will not understand exactly where the developments are happening. I majored in transport and logistics management, so I really understand what this means for an urban development, for an area, how it's going to improve the traffic flow, and how it's eventually going to increase the likability of this location, right? I have simplified this, basically what they say in this article, what they say in the plan. There's a lot of developments as part of this project. It's over $500 million of an investment, but I'll explain what's relevant to us, what's relevant to JVC, someone investing in JVC, right? There are 4 main developments happening in and around JVC to increase the likability, to reduce the traffic flow, and to reduce the congestion of this location. First one is going to be a bridge connecting JVC and Al Barsha South, a bridge with a length of 1,150 meters, over 1 kilometer. Now, let me explain what it means, where it's going to be in the map. Okay, so this is the Google map. This is where JVC is. This is where JVC is. And this is Al Barsha South. Now, why is Al Barsha South so important. Now, right now, if you are to go to somewhere in Al Barsha South, okay, before that, Al Barsha South is where a lot of schools are, including James World Academy and so many schools. It is home for Dubai Science Park, where there's a lot of laboratories. It is basically a community dedicated to medical professionals. So there's a lot of companies related to medtech and stuff like that. Then you have the Miracle Garden, Butterfly Garden in Arjan. So this is Al Barsha South, right? Now, currently, if you are to go to Al Barsha South from JVC, for example, from somewhere from around Circle Mall, if you are to go to Al Barsha South, I've just put a random location, you have to enter into Hessa Street and go all the way down and take a roundabout U-turn, and it's a mess, right? During peak hours, this journey could take around 20 minutes, 25 minutes, even beyond that during peak hours, right? Now, right now, when I took this screenshot, it's entirely blue, so it's no traffic, right? Alternatively, we have to take a long route basically. So what this bridge means is that this entire, so there is going to be a direct connection from this side to this side, right? So this entire thing is going to be cut off. You can directly go. It's significantly going to reduce the travel time. So it means it's easy connectivity to the schools, to Dubai Science Park. So people, professionals working in Science Park, JVC again would be a preferred location, because actually Science Park compared to JVC, the prices are more expensive as well, and JVC is a more livable community, and it has already proven that people, JVC, those who are living in JVC, they love living there, right? So that's one thing. That bridge is a important thing. Further up, there is Dubai Hills Estate. For professionals working in Dubai Hills Estate who look for much more affordable options, I believe JVC is a good community, a viable alternative. Between Dubai Hills and JVC, if you look at the communities, the vibe that JVC gives is preferred by a lot of Westerners, young professionals, Europeans, right? So JVC is a good alternative, and once the traffic congestion problem is solved, that's a possible alternative that people are going to look at. Next development is a direct flyover from JVC to Hessa Street towards Al Khail Road, right? Meaning there's going to be a direct connectivity from JVC, direct flyover. You don't have to worry about, you don't have to wait at the signal, because again, there's a lot of time spent by travelers at this location, at this intersection. That's going to be cut off. You can directly enter into Hessa Street. And as part of this development, Hessa Street capacity is expected to double, right? So then another bottleneck there is also going to be reduced, taken away. So this is another development, and this is actually going to reduce friction for people working at Al Barsha Heights, Dubai Internet City, in this location, because it's directly connected, right? Yes. So the next development, this probably could be the most important development. There's going to be a road, or rather a bridge, that connects JVC to Al Khamila Street. This is Al Khamila Street. This is Al Khamila Street. So right now, if you want to go from JVC to, say, somewhere here, again, let's understand it through Google Maps. I have put a random location in Al Barsha Heights. From close to Circle Mall, if you want to go to Al Barsha Heights, it's around 16 minutes when there is no traffic. When there is traffic, it's over. It'll be a good 25 to 30 minutes, right? Because you have to take a long route. If you look at from here, you have to go from Hessa Street, then it's a long route. You can understand that. Now, what this direct bridge means, look at this. I have just put a location from here again to the same Al Barsha Heights, right? This is exactly what's going to be once there is a bridge. So this destination is going to be here. So it's going to be direct connectivity from here to here, right? So it's significantly going to cut the traffic time. That's one. Other thing is, this is this means that it's a road parallel to Hissa Street. The traffic is going to be distributed into two major corridors. Right now, Hissa Street is one of the main, probably the main corridor in terms of traffic to and from JVC. So it's going to be distributed into two. That's a big thing. And another development is going to be that there's going to be a tunnel connecting JVC directly to E311, Mohammed bin Zayed Road, right? So it's again, that's a big thing. E311 is one of the three main highways connecting across Emirates, right? So from towards the south side, you can go to Dubai South Expo City, and towards the north side, you can go to Dubai Land and Sharjah. So this is the main highway, and there is a tunnel directly connecting that. So the government is paying some serious attention to significantly increase the connectivity, to reduce the bottlenecks, and to make sure people living in JVC are having a smooth commute to and from the community. Adding on to all this, recently we all know the announcement of the Metro Gold Line. By the 9th September 2032, the Metro Gold Line is going to be entirely functional. That's a big thing because the Metro Gold Line again connects to the Metro Red Line, and it also connects to the Etihad Rail, right? Now let's understand. Station number 16 is JVC, and just two stations away, this Metro Gold Line is connecting to the Etihad Rail, right? Again, on the other side, 3 stations away, it is again connecting to the Etihad Rail. So there are only 2 Etihad Rail stations in Dubai, and the Gold Line is connecting to both, right? And here it's also connecting to the Red Line. So it's from the Metro Line, it's easy connectivity even to, Etihad is going to connect to Abu Dhabi, to Sharjah. So you get the point, right? So this is a big thing. By 2032, it is going to be functional. The government is paying serious attention to this location because they are serious about the number that I said, 300,000 people residing in JVC. They want that, it's official, and they are going towards that, right? So whatever people say, everything is noise. Fundamentals tell a totally different story. Not many people are talking about these fundamentals, unfortunately. Hence, people are not aware. Because if the government didn't believe in this location, none of this would be happening. Next, let's understand some numbers of this location, because ultimately for an investor, numbers are what matters, right? So let's understand the numbers and then we'll talk about the project a bit. And then after that, towards the end, I'm gonna explain who this project might be suited for, who should be looking at this opportunity and who should not be looking at this opportunity as well. Okay, so first of all, we are going to understand how rentals are performing in JVC and in the surrounding communities. Let's go back to the map. So this is JVC. This is the community that we are talking about. Let me remove this. Okay, so you have Arjan here. So we are going to look at Arjan. We are going to look at Sports City. We are going to look at Motor City. We are going to look at JVT. We are going to look at Production City. Let's understand these surrounding communities because those are the neighbors, right? So first, let's understand JVT. 3,400 rental contracts entered into last year over the past 12 months, right? Okay, that's JVT. Now let's understand Sports City. This is where Sports City is. 8,700 rentals. Next, Production City. 6,900 rentals. Next, we are going to talk about Motor City. 2,075 rentals. And last, let's understand Arjan. 13,172 rentals recorded over the past 12 months. Now let's understand JVC. 28,000 total number of rentals recorded, right? So out of all these communities, 1, 2, 3, 4, 5, 6, out of all these 6 communities, 45% of the total number of rental contracts recorded took place in JVC over the past 12 months. This is what I was talking about. People, despite all the noise, people prefer JVC, and that's why we are even talking about this community. A lot of developers are trying to capitalize on this opportunity, right? However, we have to be very careful. There's a downside to this as well, because a lot of developers are trying to capture the market in JVC. People also have a lot of preference to choose from when they try to rent out. And we need to understand one thing about the demographic of people, the preferences of people, given the kind of people living there, young professionals, a lot of Europeans and all. They are very much quality concerned and they pay a premium for quality, right? So you have to be very selective about the developer when you invest in a community like this, in a highly competitive location like this, right? IMAN as a developer has proven it time and over again. So the project that we are talking about today, Oxford Cove by IMAN, right? So first of all, let's understand some numbers and past performance of this developer IMAN, and then we can gradually move into the details of the project. This chart shows the average absorption rate of JVC, Al Barsha South Fortis JVC. So average absorption rate in JVC is 70.76%. And if you look at the average absorption rate of IMAN as a developer, because IMAN has a lot of projects in JVC, already more than 3-4 projects have been handed over and rented, and there's a lot of projects in the pipeline as well. That's 96%. This is probably the highest absorption rate in JVC for any developer, 96%. Now let's understand some numbers, how they have performed. One of their past projects I have taken. So this is the median price for one of their completed projects, Oxford 212, one of the very successful projects in JVC. Average price for a one bed, I have taken one bed for a reason. Particularly this location, one beds are the most in demand, particularly this location. So even if you're looking at an investment, one beds are a good choice over a two bed. Studios are almost equally competitive, but one beds are slightly better. We will understand why in a moment. Average price for a one bed, 1,325,000. There are one beds resold at 1.4 million plus as well. And the median price per square foot is 1,750 dirhams per square foot. This number is very important. Keep this in mind. We will understand in a moment why. Next, if we talk about rentals, 90, 95, 105, these are some of the recent rentals. Average is above 90,000. It is above almost 90,000, 100,000. And I found out some rentals at 125,000, 110, 125,000 for a one bed. That's a very big number in a location like JVC. This clearly shows that people are willing to pay a premium given the quality. Because see, from a young European professional's point of view, if you look at the other alternatives where similar people live, if you look at Dubai Marina or JBR, an average one bed, not this quality, an average old building, you are looking at around 130, 140,000 plus for an average building. And if same building, if it's a good quality one, you're looking at over 160, 170,000. Versus in JVC, you are able to get a very nice, exceptionally well product at a rental of 115, 120, 110,000, right? This is probably the highest rental for a one bed in JVC, because there are in this very JVC, there are one beds that are rented at 80,000 as well. The difference is the quality, the standard of delivery, the maintenance. That's what it is, right? Basically, this number, this rental figure and the resale value is a testament to how much people are actually willing to pay for a developer for a project. Merely looking at the off-plan prices of a developer for a project will not give you the full picture. But this number, the rentals and the resale value, that gives a true picture of the quality, the pedigree of a developer. Let me walk you through certain other numbers real quick of this project, of this developer, before going into the new project that we are talking about. Look at this. Original resale has happened at 975,000 dirhams, 1370 dirhams per square foot, and it has been resold recently on 28th March, the transaction has been recorded at 1940 dirhams per square foot, 1940 dirhams per square foot. This is a one bed. Then this is very interesting. 840, original price 1160. It has been resold in a few months from October to July, around 7-8 months at 1130. Slight price drop as well. This probably would be a distressed deal or someone who was in a hurry to pay for some reason. Then the resale has happened at 1850 dirhams per square foot with a capital gain of 64%, right? Last December. There's one investment fundamental that we can understand from here. You could come across agents who say, okay, I'll buy now, I'll flip in 6 months, right? This is what happens if you try to flip in 6 months. You are not going to make money, right? You buy at 1160, you sell at 1130. Worst case, you sell at the same price. You're not going to make money in 6 months. Not anymore. That was the case maybe 10 years back in the market, but not anymore, right? The true value comes as and when the property matures closer to handover. That is when people are willing to pay a premium, and even after handover, right? This is a testament for that. Now let's understand some details about the project, Oxford Cove. Unfortunately, this project is still at pre-launch stage, and usually I'm not very comfortable sharing details or making videos for a project which is at pre-launch and where I don't have full access to information to yet. However, given the nature of the launch, and I saw there's some traction being built. I went to the developer's office the other day. I saw genuine traction being built for this project, and people are already placing EOIs. So I thought, whatever the information I have, it's only fair that I share the information. I share my analysis, because for you and as an investor, you can then make a well-informed decision, even though the full information is not out yet. Okay. Now, okay, so 247 residential units. You have 6 retail. It's a low-rise building, G plus P plus 5 floors. You have studios up to 2-bed duplexes. You have the prices here. I would personally prefer this layout, 1-bed plus study, because the difference between 1-bed and 1-bed plus study is just 50,000 dirhams starting. But if you look at the 1-bed plus study, it's like what, almost 100 square foot extra you are getting. So I believe it's good value for money, and you have a study room as well. So it's good value for money, right? For not much extra you have to pay. Then you get the payment plan. This is the general payment plan, 50-50. You pay 20% down, 10% in 90 days, 10% here, 10% at 40% construction, and 50% at handover. However, as per the information that I got from the developer, we are expecting the launch on the 13th of this month. That is the information that we have so far. They are running a pre-launch offer until that day, where you have the payment plan for 40-60 instead of the 50-50 payment plan. So what's the difference? This payment you don't have to pay. You're supposed to pay this on the 7th or 8th month. That is roughly when the 20% will be constructed. You don't have to pay that. The next payment you have to pay is on the 13th month, around 12th to 13th month from today. And then 60% you have to pay on handover, 2029, right? That's a very beautiful payment plan, because I mean, for a good 1.5-2 years, you don't have to pay anything, right? You only have to pay 40%, and you wait for 1.5-2 years for the capital, for the property to appreciate. I'm talking about if you acquire this property during pre-launch, right? If you place an EOI and if you acquire the property during these days, then the benefit is very high. Still, even at this, as it is with a 50-50 payment plan, still it's good leverage that we are talking about. Why am I talking about mainly 1-beds when there are 2-bed duplexes, studios? From an investment point of view, let's understand again some numbers in JVC so that it will make sense. So if you could remember, we went through this screenshot earlier. 28,000 total number of rental contracts recorded over the past 12 months in JVC. This is for 1, 2, 3, all the number of units, like whatever type of bedrooms. Okay. Now let's understand, out of this 28,000, 7,600 studios, 15,000 1-beds, right? So out of this 28,000 total transactions, 22,000 are a combination of studios and 1-beds, and the number of 1-beds are 2x compared to the number of studios. So that's why I am talking about 1-beds, right? Even if you talk about the rental yield, yes, the studios are slightly high, percentage wise average, but still the speed of rental one beds are going to be high because obviously the numbers tell that, right? So that's the reason why I am talking about one beds. I'm putting my primary focus on one bed. However, both studios and one bed, depending on your investment size, are good investments in this location, right? Two beds, yeah, two beds and two bed duplexes, yes, if the purpose is for you to live in, then we can look at. But from a pure investment point of view, I believe studios and one beds is what you should be looking at. Let's understand. I mean, I'm not going to go through all the layouts. I just took two sample layouts for one beds, one with study and then one without study. So this is basically the entrance. You have the open kitchen to your right side. You have a study room. You have a laundry room. You have a powder room here. Actually, this is more than a powder room. This is a proper bathroom. You have a bathing area as well. So it's a proper bathroom. That's an advantage. So basically this layout is with two bathrooms, living area, bedroom, bathroom, right? Then if you look at this layout, you enter here, again the open kitchen, living room. Here you don't have a full bathroom, it's a powder room, right? So that's the difference between the one beds plus study and one beds. All right, next, let's understand the kind of rental yield that you can expect in this location. So again, I have done this for a one bed, assuming a price of 1.2 million and a gross annual rental of 120,000. This is not a two bed, it's actually a one bed. My bad. We saw the numbers ranging from 90,000 up to 125,000, and we are talking 3-4 years down the line. And I believe, given the trends, and I explained how JVC traffic situation and everything, the population growth is happening from 80,000, currently 80 to 100,000 right now, up to 300,000. Given all this, and the metro goal line is coming up in 2032. Given all this, I believe 120,000 for a one bed is a fair assumption, right? And I think it's pretty conservative as well. We are looking at a gross ROI of 9.6% if it's a cash purchase, meaning you pay the whatever the remaining, either 50% or 60% cash at handover. If it is a mortgage purchase, I've done the math separately. If you want to understand the details of the mortgage repayment, I have assumed a 5% interest rate and I have done the math separately. If you want to understand in detail, get in touch with me. We can understand, we can talk, we can discuss, and we can understand the numbers in detail. But for the purpose of this video, I've kept it very brief. ROI is 9.8%. This is just the first year ROI. This is going to grow because the equity element of your investment is going to grow from handover. In any case, still these two numbers, like 9+% of rental ROI, is not something that you could generally expect in today's market in Dubai. So this is definitely a good ROI. There is one other reason why the ROI is so high, because before this whole situation of this crisis situation in this region started, you would not have been able to gain this ROI. What do I mean? Look at these numbers. Oxford 212, the project that we explained earlier, the ready project of this developer. If you could remember, I showed you the screenshot. The average trading price per square foot today is 1,750. And we also saw certain units being resold at 1,940 dirhams per square foot, right? However, this developer, the average price per square foot of this new project is around 1,500, 1,481, right? That is 18% below the average of what a ready property of this same developer is trading in this location. Okay, this was not the case before this whole situation started. So clearly there is some benefit for an investor investing during this period, right? This is very important. Developers are offering these incentives. 40/60 payment plan is not something you could expect from a developer of the caliber of IMAN before February, right? This was the same trend that we noticed soon after COVID. The prices, developers offered discounts, developers offered payment plans, right? And those who invested then, say someone invested in 2020, soon after COVID, gained significant benefits advantage over someone who invested in 2021 in terms of payment plan. because there's leverage in play when the payment plan is flexible, when a higher component of the payment plan is pushed towards the handover, there is leverage at play. And this, it's very visible, right? So this is why I thought I should talk about this opportunity, because I genuinely see genuine value in this for an investor looking at opportunities. I come across investors asking for distressed deals, right? uh, there's a lot of deals packed as distressed, but if you really understand the fundamentals, most of these units, investors were actually struggling to sell even before the whole situation, right? So genuine distressed deals are very rare in the market. This is what I would call a distressed deal, right? uh, I mean, let's understand the definition of a distressed deal, or a good deal, right? A good deal, I believe, is something that you would not get if the market conditions were normal. Well, this is something that you would not get if the market conditions were normal, right? Yeah, so that is about the project, about the payment plan, about the numbers. I believe it was useful. Now, one last bit, let's understand who this investment opportunity is suited for and who should not look at this. First of all, this is not a 6 to 12 month flip. If you have been promised that, it's wrong. I will not promise that. You don't expect to flip at in 6, 7, 8 months. No, you have to hold it until at least until handover, right? Second thing, even at handover, you can expect, of course, given that there is a reduction of the price that it is trading today, you can expect a small capital gain appreciation, let's say 20-25%, which is still significant given that you only pay 40 or 50% during construction. But if your main objective is primarily to flip at handover, well, I mean, yes, you could look at this, but there are better options, there are better alternatives, right? I believe if you are looking at holding it, renting and making good money, expecting rental ROI, then we saw this is probably, I mean, I didn't come across any other project in this price range which could offer this much of rental ROI. I am analyzing projects on a daily basis. This, I believe, is exceptional. So this is a good opportunity for someone like that. And given the demographic of people living in this location, young professionals, this is not Arabian ranches, this is not Modona, this is not a gated community where families live long term, 10, 15, 20 years. No, this is a community where young professionals, people who are new to Dubai, there's a lot of people here who are new to Dubai, remote workers, right, live here, and they move 4, 5 years, 3, 4, 5 years later, they move to a different community with families. They upgrade to a gated community, to a villa, to a, yeah, for example, Dubai Creek Harbor, somewhere like that, right? So the period a person average lives in this location is short compared to an established community. And your investment also is going to function just like that. You have to hold this opportunity, rent it out for 4, 5 years and then resell. This is not a location where you invest and hold it for the capital to grow for a long term. If that's the objective, again, there are other options, right? Here, the objective is to make some good money for 5 years. Of course, in 4, 5 years, of property is going to be at its peak, then you resell. That is what I believe the best strategy for this location is, right? Yeah, those are a few thoughts, insights that I wanted to share with you about the project, about the developer, about the location. I hope, I believe the video was insightful, helpful. If you haven't already subscribed to my channel, please do me a favor and do subscribe to my channel. If you want to discuss anything about investments, about this opportunity, or about your investment strategy, feel free to get in touch with me. Having that being said, signing off until next time.